Let's take a look at some charts, graphs, information on Decred for Brave New Coin. Decred is a hybrid proof of work, proof of stake coin that uses the Blake 256 R14 now, I think, algorithm, consensus algorithm. They are a cousin of BTC in some respects. I call it a fork. The Decred people take that as a negative connotation. Yes, code was rewritten, but it was also borrowed from BTC. Yes, code was fixed from BTC because there were errors. I get it. So let's just put that in a box off to the side. The idea being that hybrid proof of work, proof of stake is more secure than proof of work or proof of stake alone. And something curious has happened recently. They've decided, this is their governance system, Polyatia. They've decided that proof of work is a scam. They've decided that proof of work is malicious. Miners have been dumping for years. You don't see this sort of thing crop up when price is going up, certainly. So that's the first interesting thing to discuss. It is what it is. Miners are paid to secure the network or participate in securing the network. And they're incentivized to do so. If they want to sell Decred, BTC, ETH, whatever, that's their prerogative. It's a weird sort of victim complex that is kind of bizarre that we're seeing on lots of proof of work chains that are trying to rationalize going proof of stake, like Zcash, just to come to mind. I see it and hear it with the ETH people as well. I don't know why they think proof of stake is going to save them, but hey, let's give it a shot. So they're switching proof of work, proof of stake from 60-30 as a percentage to 10-80 as a percentage, meaning that proof of stake will get a 50% bump in the block reward. How it's currently broken down is as follows here. You can see the block reward. This is dcrstats.com. I like how they just give you everything I need to know. As an analyst, I wish every chain from now till the end had this simple infographic. Block times tells me the supply. It doesn't hide that there was a pre-mine. They even use the word pre-mine. There was an airdrop. There is a dev subsidy, which I do like. The idea of the dev subsidy. The harder part is the people part. How do you separate that out? How do you pay the devs? Zcash has a dev subsidy effectively. They've had trouble historically doling that out. Litecoin has to beg for donations to get stuff done. That's not a good look either. I don't know the perfect solution here, but what you don't want is your devs on your chain getting captured by some corporate entity or whoever else because nobody else pays them. And you can see that dev subsidy per block reward here. Now, is it 30%, whatever Zcash used to be, whatever it is now? No, it's much smaller than that as a percentage, 10%. And I'll look at the numbers of the treasury. I don't know why it's flat. I don't know if it's just being calculated incorrectly. I didn't double check and look into that specifically, but we'll get to that. So here's the hash rate, basically just flat over the past year, certainly volatile. This will rise and fall with price. Difficulty will change as well. Not anything super specific to report on other than the April Chinese exodus of miners also did affect Decred here, but that has since been restored. And the most impressive thing about Decred for me is the solo miners are a significant portion of the total hash rate, 41%, the largest percentage. So when we talk about miners being malicious and selling, and then we talk about solo miners being the biggest percentage of mining, I don't know, that doesn't really add up to me. But again, you didn't see these cries for malicious miners selling when price was going up, at least not that I saw. So it's interesting the framing of the proposal and the acceptance of the proposal in a time when price is falling. Certainly they had this in the works for a while now, but the timing is interesting for sure. If you look at the ASIC return per day at 4 cents per kilowatt hour, which is what most miners get, this isn't even a great reward in the grand scheme of things. You're much better off mining ETH if you have a choice. If you're using this, if you're using a GPU or something, if that's even viable with this algorithm, you're just better off mining ETH or buying an ETH ASIC. These aren't available yet, but if I want to maliciously mine something to ruin price, I'm not going to mine Decred. I don't know, just bizarre again. Here's Decred's active nodes. I don't know why this never shows up for me. It doesn't load, but ideally you want to see more than 200. You want to see global distribution all over the place, not just the US, not just Europe, not just Asia. You want to make sure that's not capturable as well from a decentralized perspective. One of the metrics we can use for miners is it's called the Puel multiple, but I like to think of it as how rich are the miners getting multiple. And in general, this lines up with price. Typically, if anybody gets a windfall of money, or if anybody's in mega massive profits, they tend to want to sell more than buy, and that skews the supply demand curve. So typically, but not always, when miners are making a ton of money on any coin, they will want to sell. So is that malicious? I don't think so. Now, I don't know the exact rationale they were using. I'm sure you could read this full report here as far as what they deem price suppression. But if we look at the miner selling metric, the miners are not in mega profits here, certainly, as price is declining. And if anything, it's getting closer to the buy zone based on this metric, what they call miner stress. And even in the bear market, this thing kind of held at parity or at unity, as they call it. Decred also has a DEX. I can't view that without downloading the client, I don't believe, but I can look at the volume per day, and that's certainly declined along with a lot of centralized exchange volume. Now, if we look at ETH DEXs have actually held their volume highs over the past couple months. So what's weird to me here is that volume is dwindling, but on-chain activity is rising or continues to rise significantly, and I'll look at that in a second. So there's a bit of a disconnect there as far as what you'd expect with DEX activity versus the rest of on-chain activity, unless there's a piece of the puzzle I'm missing here. Staking volumes are also pushing highs here, as it looks like 60% staking participation now. And the best reason to kick off miners is because you want to shift the focus towards what I call pumpamentals. If we're soaking up the supply, then we have this incentive to hodl on, which will then more likely than not hold price or push it higher. And if we just call it that, I have no problem. It's calling it something, framing it one way, and then hoping we get a different result. So to see this is incredibly bullish for anything because it's a supply soak. Now, is it a massive vested thing? I think it's 14 and 90 days or something. It's not going to move the needle in a massive way, but it does show you the general sentiment here over the years for supply. And we can look at the adjusted reward, delegating, or the ticket system. It's not great as a percentage. Now, if you're bullish on DCR or if you're a long-term holder of DCR, it's just icing on the cake for you. You don't care what the reward is. You're just getting something back rather than getting eaten alive by inflation completely. But gaining interest on stablecoins will likely give you better returns than the cred currently. Now, this will change once things go 1080 in favor of proof of stake. So this reward will get bumped up significantly in the staking department. And that may help them as well, price-wise. Lock up more Decred. 62% participation, certainly at or near all-time highs historically. If you look at transaction counts and average transaction values, transaction counts kind of exploded in January through May, along with all of crypto. Part of that was DEX related. Since then, average transaction values and transaction counts have declined. Transaction counts still holding well above sort of historic lows, let's say. It's not at all-time highs as it was in 2017, but the network has changed a few times, so it's hard to compare any period to any other period over a long time frame because things are different, right? They have a DEX now. They didn't have a DEX before. So that's certainly going to affect on-chain stats. If we look at their privacy component, which just like Dash, I mean, this isn't really, if it's not default privacy for everything, it's able to be figured out. That's just how it is. You can try to obscure your values all you want. You can try to tell me that this is privacy. Sure, if you're happy with that, then I'm not going to argue with you, but ultimately you want end-to-end encryption. Now, is this better than BTC where everything is completely visible? Sure. But if you want to find this, if you're a chain analysis company, you're going to be able to figure this out. It's not going to be a big deal. But anyway, stake shuffle volumes, coin shuffle volumes, stake shuffle plus is what they call it, is rising over time here. So more people are certainly using the mixer on chain, and that's also going to affect on chain stats. Active addresses rising, holding near all-time highs. It's hard to know what this means. We've got on-chain shuffling, we've got a DEX, right? There are different things that we can do that we couldn't do before. So this looks incredibly bullish, but reality is it's just new utility for the chain. So while it's not bearish, it may not be as bullish as it looks. And NVT also falling pretty dramatically here, really since 2019, But again, NVT wasn't really tooled to include shuffling or dexes, so it's hard to really know what this value should be. But again, it's hard to know exactly how to tease this apart. There's just too many moving variables that weren't previously there. So you could say this looks incredibly bullish, but I would tell you there's some caveats to that. If we look at the check on chain, by the way, all these charts, checkonchain.com, great website, tons of data on BTC, Monero, a bunch of other stuff. NVT and RVT ratio from them is sitting in the high on-chain activity camp, which by correlation should be a buy zone. It's interesting to see price get absolutely slaughtered here. This is market cap, not price, to be fair, but interesting to see market cap get slaughtered on high on-chain activity levels. Looking at MVRV versus price, this is on-chain activity versus market cap again. Historically, for Decred, this has lined up pretty well for highs in price. Anything above a 2x multiple for most coins is danger zone. It got to that 2x multiple in February. Was it the exact top? No, but it was definitely near the top. So currently, MVRV is falling fast at 0.7. That's probably among the lowest that I've looked at recently. It's really in buy zone territory once it gets to 0.5. So it's very close to just blindly buying this thing based on MVRV, which is interesting. Now, is that going to tell you the ultimate low for the cycle? Is it going to tell you the exact low? No, it's not. I mean, look at historically, look at any MVRV on anything that works. It tells you when's a good place to time a buy. It doesn't tell you that this is going to be the bottom, right? So this may wax and wane between 0.4 and 0.8 over multiple months, but the idea is you're accumulating in those periods and you're not accumulating when MVRV is closer to 2. So as a buy opportunity, I like that. We also see that echoed on the check on chain charts. Their MVRV also approaching buy zone territory down here historically. So no real surprise there. Unrealized profit loss, just some more charts to look at here, is another one that's interesting. Usually you want to buy when there's capitulation. You don't want to be selling. So to see that we're leaning more towards capitulation is interesting. And this is the same with BTC and ETH. A lot of the short-term holders are realizing a ton of losses. So whether this was crowded trade, whether this was liquidations, hopium, whatever you want to call it, the stars are aligning for fundamentally buy zone looks decent coming up soon. Let's say we have a Q1 bear market. Let's say this retraces to the previous lows, then sure, that looks like a decent buy. Again, it doesn't guarantee this thing's going to pop immediately from those levels. It just says those levels are a better buy than when things are in euphoria and greed territory. Much like Bitcoin, we can look at the hodl waves for the cred. These are different for the cred than BTC because of the staking proof of stake stuff, or the ticketing proof of stake stuff. I don't really have any analysis here for this because it is kind of all over the place as far as coin age is concerned. Just know that it does exist and you can look at it. I mean, I guess you could correlate the orange slices with highs if 80% of the chain has moved in 1 to 3 months, 80% plus. That's correlated pretty well with highs historically. So if 80% of the chain has moved in the past 3 months, I guess that's fair. I'm just looking at this y-axis here, but that's pretty loose. So no real strong analysis on that one. Here's the treasury flows I was mentioning. So if we look at the treasury balance and the inflows, they've been flat since May. I'm assuming this data is correct, but if I look at the DCR stats website, it tells me the dev subsidy is still accruing. So I don't really know where the disconnect is there. So lots of fundamentals for Decred. It's interesting to look at something that has all the data, has all the history, has a community that's digging deeper on the metrics like that and makes them available for someone like me to look at. So I appreciate all that stuff. Flipping gears to technicals. This is the 1 year MA in the green, the 1 year MA multiple in the red. This is the 5x multiple and the midline here. And just like any oscillator, sell zone up here, buy zone down here. Again, does not guarantee immediate reversal when it gets deep into the sell zone. It doesn't guarantee time duration in the sell zone either, or the buy zone. This thing was in the buy zone for like 3 years, right? In general, for most charts, they only usually poke into the sell zone and they're typically deeper in the buy zone. So we are definitely in the buy zone here on the 365 MA. So as an accumulation level, sure, I like this. Like I mentioned, MVRV, that's one other thing to look at as well. telling you this is a better place to buy than it was previously. The trend metrics will tell you things are bearish. And generally that's when you want to be accumulating for a multi-month, multi-year time frame. Does it guarantee a win quickly? Does it guarantee a win against ETH, against BTC? No, it does not. You may be in negative profits or losses for many months, okay? But it does tell you, yeah, this is a pretty good buying opportunity. I think anything down to 10 is fine. Do I think it's going to go that deep? No, but if we have a broad bear market in 2022, then yeah, this could just Eiffel Tower all the way back down to that 10 to 15 level. 1650 is the high volume area on Polo. We do have a death cross here, and you can say you don't like EMAs or MAs, but when you get a bearish cross for the first time in many months, that should be taken seriously as, yeah, this is a pretty good time to get out. Was it the best place to sell? Certainly not, but it would have saved you a considerable amount of downside here, as we're down probably 50% from that cross. I didn't even realize the cred had sold off as hard as it did. This is the 2-day cloud, kind of zoomed out a little bit, but we are far below the cloud, so trend metrics not on your side here. For bullishness, the expectation isn't higher highs, the expectation is selling. You know, this may mean revert, this because this looks pretty oversold on a few time frames. I think on the RSI, it probably poked into all-time lows. I just remember all the VCs, all of the Bitcoiners thinking they had this amazing trade. And it was, right? If you're down here, there's no denying that this was a great trade. Even against BTC, it did well. Against ETH, it did okay, right? That's fine. But these things usually don't end up being a paradigm shift. They are a trade. There's a time and a place for that. And this does pull back. Now, it'll be interesting to me if post proof of stake transition for improved rewards, killing the miners, whatever, that you continue to see selling off in price. I mean, that would be incredible. And that should go live. What is the date on this? I don't know if they give an actual date down here, but 2 to 6 weeks development and testing. So probably sometime in 2022, I'd revisit this chart and see what it looks like. But trend metrics certainly bearish now. And against BTC, it diamond topped, it death crossed, and down it went. No surprise there. It was bearish for years, just as any good cross should be acknowledged. After that, it rose up, death cross, right? So this is traded very clean on MAs on the daily, very clean on chart patterns. This is a diamond top. So expectations here certainly are not bullish. I mean, yeah, again, it can mean revert. It's mega oversold right now, but it does not look strong against BTC and against ETH. It's at all-time lows, RSI all-time lows. So yes, this can mean revert. Is it a trade for me? No. Volume also just declining here. So all sorts of divs on this. That's all here for this one. Like, dislike, comment, share, subscribe. Let me know what I got terribly wrong in the comments below. And happy trading.